Good morning, everybody. Welcome to the Flow Show. Good morning to my two colleagues, Kay and Stel. How you doing, lads?
Hello, hello. Good morning.
Good morning.
Oh, good.
Doing well?
By the way,
well?
Ryan, when you write on the chat and say good morning all, you have to select everyone, not just hosts and panelists. Because we only saw your good morning and not the other people. Just saying.
Set to that?
Just,
I didn't know it was set to that. There we go. I should do it now.
No, rightio.
There we go. I didn't realise that. Thanks for pointing that out,
okay.
mate.
That's okay.
So, no, I wasn't being rude. Right.
How are you, Ryan? Everything all right?
Yeah, a bit quiet this morning, ish. I think we're seeing the effect of these dropping vols kicking in a bit. As you know, when there's nothing going on, there's nothing going on. I think we're seeing a bit of that in the market, but we'll come to that in a moment. Let's start off over in China, as we often do, and they kept their LPR rates unchanged overnight as expected. So no further easing of those measures, LPR and MPR. Obviously, the last move they made was in the RRR, which is the reserve requirement ratio. And a PBOC official said they expect consumer price inflation to pick up later this year. If that is the case, that could move them a bit further away from easing. If they do see inflation start rising in China, the market is still thinking that they may still ease. Yesterday, we did hear that they're potentially going to create some measures to help with consumer spending. So we still yet to hear what happens on that, but keeping an eye on inflation. This is something I was looking at when they first started reopening as to whether inflation would pick up there as it has in every other economy, because that would then influence monetary policy. So the official is expecting inflation to pick up later this year. We'll see to what level. And speaking of the yuan, a Reuters poll said analysts have turned bullish on the yuan for the first time since February. So for a couple of months anyway. People expecting the yuan to do well. Not that it's done an awful lot recently, as we've pointed out. Over to the good old BOJ, and the stirring spoon is firmly in the pot because we're getting sources, pieces, ex-pieces dropping, quite regularly now. Yesterday, Bloomberg had their HP sources saying that the BOJ is said to be wary of tweaking the yield curve control in April. And it said they were likely to mull if a guidance change can wait or not. This was dependent on, or suggested it was dependent on, whether there was any further fallout from the banking crisis. And a smoother yield curve is said to suggest there's no need for a move now. That was taken, even though the headline was that they were wary about tweaking the YCC, the reasons given, i.e. the banking stuff, which most people think is in the rearview mirror now, if that was a reason for them not to do that, if that's not a problem, then they may tweak yield curve control. So it was seen as a bit of a hawkish headline from that one. Then Reuters dropped one as well this morning saying the BOJ is opening to tweaking the YCC this year if wage momentum holds. And we had an ex-Ministry of Finance member, Tamaki, saying he urges the BOJ to alter stimulus while momentum lasts. So the question is, I'm going to throw it to Kay, are we getting these, these sources pieces? We had that previously when the BOJ wanted to test the waters, as it were, for different things. Is this another case of that, or is this just the news wires wanting to drum up some clicks?
That's actually a pretty good question, because I'm not sure that Ueda is one who is sending messages out. But in essence, what everybody is really saying is that they don't really expect them to do anything this month, but they're more looking at the second half of the calendar year, not the fiscal year, but the second half of this calendar year, starting somewhere in July or August. So I don't know. It's just if they are testing the waters and not do anything before July or August, they are sending out messages quite early, right? Now it's possible. It's possible that these are messages. I'm not going to speculate on that. It does look though that the Reuters piece is a bit of a taking everything together and put it in one article, because they never say how close those sources are to the Bank of Japan and those people in the knowing or whatever. It could be like heads of the Japanese mega banks also, or their economists,
yeah,
throwing that into the open. Yeah, I mean, my view still hasn't changed. Normalization, they will have to use this window if they want to, or if if not even if they want to, they should. But it's all going to be relatively slow, because they for sure don't want to put the government funding into danger straight away, because they know that if they change a lot at the same time, the markets are going to go the markets are going to go ballistic. And also the fact that the way I said that they don't see the need to immediately review the 2013 agreement between the government and the Bank of Japan. That does send another message that they are not going to be in a hurry to do anything massive, right? So, and I guess the market is now just trying to find something. If such an article comes out, dollar yen drops 40-50 points, and then once everything is done and dusted, people find themselves short dollar yen and they have to buy back, and as a result, we're still hanging somewhere between 134 and 135, and depending on the headlines, it's going up and down. But the one thing that I would say, and I'll show it on the charts, is that for the first time in a month, we closed above the daily cloud, and we've retested it quickly this morning, and it's holding. So I think it's relatively interesting.
Yeah, definitely. I'll just put that in there.
I have to zoom in.
Yeah,
130.33 today.
Yeah, I mentioning yesterday that we were sticking our nose up and down above it, but not actually making a move outside of the cloud. And this could be a day where we're going to be doing that.
The last time we closed above was, I think, exactly a month ago on the 20th of March or so.
Let's have a look. Around about there somewhere, wasn't it? Early March, 20th of March. Anyway, yeah. I like to see candles above, not moving through like this. I like to see a nice, hold above or below the area. When I look at such things as clouds, I like that with most tech, but that's a different conversation. But back to the BOJ, I think we should be prepared to get a lot or a few more of these sources drops. Keep an eye on the Bloomberg ones. It's always worth noting who's dropping what headline of he said, she said, because Bloomberg can be one that you can get a decent trade off if they come out with some, let's just call it politely, complete bollocks. So if they come out with a headline saying the BOJ is going to hike in April, say sources, you probably know that's complete bullshit. But anyway, keep an eye on that. We're going to get markets getting a bit jumpier into next week. We've obviously got the CPI coming out tomorrow morning, early in the morning. So that's going to be a mover for yen, I think, if there's a decent variation there. But staying with Japan and the BOJ, and they've issued one of their regional assessment reports for the month, and they've kept the assessment of 7 of 9 regions unchanged. They downgraded one and upgraded another. And from the report, they say that according to assessments from regions across Japan, all of them reported that their respective economies, despite being affected by factors such as high commodity prices, had been picking up or had been picking up moderately. with the impact of supply side constraints and coronavirus waning. So momentum is still on the positive side as far as across Japan and the economies therein. Kishida said he's not thinking of raising the sale tax for the time being. This has been one of these situations they visited a few times over the last few years, raising sales tax. Not looking at it again at the moment, but again, it could be something that features further down the line. Now, the Kiwi got a bit of a knock this morning or overnight due to some CPI data that came out, and I'll just pop it up there for you. So CPI came in a bit softer than expected and down on last month, both the quarter-on-quarter number and the year-on-year number. Then there was another CPI. The RBNZ have a what they call a sectoral factor model inflation index. Don't ask me what that's all about, but it came in lower as well, 5.7% versus 5.8% prior. So that gave, as I say, Kiwi a little bit of a knock on the head this morning. Where was it? There we go. Because that has pulled out a bit of rate expectations from the market on that. So you can see there's a bit of a dip there in the Kiwi. Do you think that changes anything, lads, for that? I mean, the probabilities show that we're expecting a 25 pip hike at their next meeting at 83% and unchanged at 17. Some of the factors behind their last surprise 50 hike was the storms and stuff impacting things. Do you think they're going back to normal, or do you think a pause is back on the cards?
Well, it was a disappointing, softer CPI than expected. I don't think they're going to pause just yet with inflation where it is, but I think this is adding more incentive to the RBNZ. And in fact, you know, all central banks, we're seeing inflation, CPI and PPI dropping quite fast. You saw German PPI today down from 15.8% year on year down to 7.5% year on year. So we are seeing, you know, we're talking about the whole mathematics aspect of how it's calculated, and it's coming down. Do I think the RBNZ is going to pause? I don't think so, not yet. But I think now they're going to have more and more reason to pause, perhaps even after the next 25. And as you said, we're pricing what, 80-something% for the 25, right? They don't want to. They will never want to surprise the markets in a big way unless there is justified reason for it, and 6.7% year-on-year CPI is not reason enough yet.
Yeah, no, I agree with that. Entirely. And you mentioned the German PPI. Yeah, it did come in much softer, still gains, but compare that to the Canadian PPI that we got yesterday, and this year-on-year measure coming in the first negative, I think, since November 2020, I think it was, or September 2020. I did look at it yesterday. But this is something you're going to need to keep a watch on, these year-over-year numbers. This is what Stel was talking about earlier in this year, coming in when, you know, what prices have to do to gain over the big numbers we saw last year. And as such, if there's no gain and we start seeing these negatives, that's going to potentially flip the inflation switch the other way. Negatives on the month don't really count as much, but the year-on-year stuff, when that starts turning negative, that means prices are actually falling rather than not rising as much, because remember, it's over the prior year. So even like the PPI in Germany here, it's, you know, almost or over half of the gain it was last time. It's still a gain. It's still prices going up. So if these start turning negative, then we are finally seeing inflation coming lower, or, you know, inflation should start to move much lower, much faster on negative numbers like that. So that's a difference you need to watch for when you're watching CPI and stuff. Over at the RBA, they have put forward their review, or the government has put forward its review of the RBA. It recommends that the RBA move to a dual objective, a bit like the Fed, price stability and full employment. and they want them to retain a flexible inflation target of 2 to 3% and aim for a midpoint. They want to move board meetings to 8 a year with a press conference after each meeting. It's currently at 11. The government also said that these changes should commence from the 1st of July 2024, so over a year to go before that all kicks in. Australian Treasurer Chalmers said that they will also legislate to remove a law where the government has the right to veto RBA decisions. They want to take that away, give more control to the RBA. And they will look at keeping on or reappointing Governor Lowe in the middle of this year. Lowe said he would continue if asked. What do you make of that, Kay? They want to change things around. Not anything massive on there. But going a bit feddish.
Yeah, they just want to separate duties, which is already happening in quite a few central banks, right? I think Bank of England, by the way, Bank of Canada, if I read that correctly. Is it going to make a big change? The big change is that well, we have also at various central banks like the Bank of England and the Bank of Canada external economists, right, on the voting panel. So that would be a move more towards this kind of setup. Will it change that much? I don't know. I really don't know. The market doesn't seem to attach too much importance to it either, but I reckon that that would gain in importance, and the market may be moving on the back of it once they make a decision on it, because there's still no decision on that one, and seeing who is going to join the panel, right?
Yeah, I think I don't think there's any real market moves to be had on this. I think going to dual objectives like the Fed, you know, can put them in a bit of a sticky situation. I mean, if you look at the Fed now, they're at full employment, so they've got to fight the other side, inflation, which, as by their words, will hurt the other side of their mandate, which is employment. So it's a bit of 6 of one, half a dozen the other. They've got to combat inflation. And they've openly said it's at the behest of the jobs market, which they have to protect as well. So it can put central banks in a bit of a sticky situation. I think maybe the move to 8 meetings gives rise to expectations being able to move around a bit more in between those meetings, you know, playing the guessing game, but it also gives us more data to get on top of into those meetings, but not supposedly happening until July next year. So we'll put that in the bottom drawer and worry about it later. Coming over to Europe, the Bank of Spain issued a report saying that if upside inflation risks materialise, more rate hikes than anticipated by markets could follow. ECB's DeCos of the Bank of Spain said there's ground to cover on rates if the March baseline holds, and the May rate decision depends on incoming data. Michael just put up a comment, said members including Lowe did not agree to many of the suggestions to the RBA, so might not even happen. Need to wait for more info, he reckons. Yeah, that was just the framework or guidelines, if you like, as to what they want to look at, that RBA stuff. Anyway, back to the ECB. Schnabel said that while headline inflation has started to decline, underlying inflation is still proving sticky, talking about the core. ECB's not said the ECB will persist with interest rate hikes as long as core inflation remains high. S&B's Schlegel said cannot rule out further hikes to bring inflation under control. Bit of repeat there. Fed's Goolsbee, things to watch over the next 2 weeks until the next meeting are prices and credit. Fed's Williams, US inflation is still too high. The Fed will act to lower price pressures. It's likely to take 2 years to get back to the 2% inflation target. Right now, the market can't last 2 minutes without changing its expectations on whether the Fed's going to hike, pause or cut. So good luck waiting 2 years for inflation to get back to target. Reuters had another central bank poll out on the Fed. 94 of 105 polled said that the Fed will hike by 25 pips at the next meeting. 59 out of 100, so just over half, expect the Fed to keep policy rate changed throughout this year after that hike. only 26 said that they view a cut at the end of 2023 or by the end of 2023. So not too many more thinking about a cut now. It's still in the minority. Over to the debt ceiling football. The GOP was said to have offered a debt limit lift by 1.5 trillion or until the 31st of March next year. The White House said there should be no negotiations on the debt ceiling. It's the Republicans that need to lift it. US House Speaker McCarthy introduced some debt legislation yesterday, said the bill would claw back unspent COVID money, reduce IRS funding and end green giveaways. So the horse trading has begun. Let's see where it goes from there. That's it from me. I said not too many headlines, unless you guys have anything you want to chuck up.
No, not really. We got the beige book yesterday. I was actually away for 2 or 3 minutes. Did you talk about that or not?
No, I don't really look at that thing, the beige book.
Yeah, it's showing. Sorry?
Yeah, give us your insight, mate.
Okay, sorry. I thought Kay was saying something. So it's showing a little bit of a of concern. Credit is narrowing, and it's basically showing the economy kind of stalling, the U.S. economy stalling recently. As you say, I don't put too much importance on this, but it's just another thing to have in the back of your mind, because it kind of gives a good picture of how the various states are going. The other thing we got yesterday is Tesla earnings. I know we don't cover single name stocks here, but Tesla is a pretty big one, and they have been cutting their prices recently, as you guys might know. I think they missed just slightly, so it's one of the big movers in the indices, and it's actually negative pre-market, but not a big surprise either way. Yeah. Not much else. No, I think you covered pretty much everything there was.
Yeah. Okay. Got anything?
Yeah, I was just thinking, like, when Stel mentioned the beige book, I've put it up last night in the room and saying, like, in the Stone Age, this thing actually was a market mover. I recall it being a market mover.
Yeah.
But now it didn't. It didn't even, the market didn't even look at it, really. But still, as Stel says, I think it's worth keeping an eye on that one, for the state of the economy. And I think how much is it? 500 or so companies?
I don't know, actually.
I don't know. To be honest with you, is it company? I thought, or is it?
Yeah, but the regions, and then yeah. Well, I mean, it's perhaps a bit complicated, but yeah, it used to be a market mover, but nowadays the people are thinking more about what's happening with inflation, or purely with other stuff. The one last thing that I read was that well, the headline says that UBS ETFs is hemorrhaging money in March. Was hemorrhaging money in March, but I think the most interesting there in this article was that actually European ETFs have seen quite substantial inflows, and if we look at what's been happening in the market, with the euro crosses being this big, with the European markets outperforming other markets March, and we're actually still seeing the euro crosses being bid. It's I think that's what I've been talking about anyway for a good while in the rooms as well, and I guess that's what's been going on. And usually those things they don't last for 6 months, but we are in let's say a month and a half or 2 months in, and I reckon it's one to keep an eye on.
You know, guys, the beige book used to be the market moving just like you say, Kay. I remember that. But nowadays you have, you know, billion people speaking here and sources there and
Yeah.
speakers and all that. There's just so much information that the stuff that the beige book has or gives us is more or less, you know, already
Available.
known. Yeah, or yeah, exactly. So it's not news. That's the thing. Anyway.
Yeah.
It is
But
what
no,
it is.
I think you raise a good point that it might be worth keeping an eye on, especially to do with you know, credit and stuff, which is obviously the hot topic at the Fed at the moment, to do with the bank. So yeah, maybe we'll keep an eye on it. I'll allocate that one to you too. You can keep an eye on that one. Right, so let's get stuck into some prices then. Already looked at or brief look at the Kiwi on that one. I'm sure Kay will look at that in the crosses, so on and so forth. $1, as we said about yesterday, it for me it didn't look convincing up here. I didn't want to short it, I didn't want to buy it, and it's reverted to mean again. I don't think there's much influence from that comment about inflation as of yet, because it needs to be borne out. But something like that is what may kick this one into gear one way or another. And if inflation does start rising, then we would expect the PBSE to move away from tightening, which would be positive for the one if they take a hawkish slant. If that happens, maybe it's the downside we need to look at rather than the upside. Could mean a move all the way down towards the low sixes, definitely under here in this area. If they go on a tightening path, and maybe a move down here, that's the sort of news you'd like to trade, because if you do get a big move, at some point they'll come out and say enough's enough, and that gives you the green light to get out those trades if you manage to run something like that. But until then, I think geopolitics still prevails as the main hold over this one, and I still would like a dip down there, as long as I like the reason why, to the 680s to get in some longs and try it from that side. Dollar yen, again, a lot of pairs just not doing an awful lot this morning, unfortunately. We had another look up towards 135 overnight, and we've held it again. This looks, as Kay mentioned, a possible barrier stop run through the figure there. We can't get through it again this morning. The levels are just stepping up. The short-term levels are just stepping up again. So while that situation keeps happening, it does keep the top side in play. But we're going to need to take out that 135 to see an upside move. Obviously, we've got the CPI coming up. That could be a big mover. And then we really roll into BOJ expectations, and then we could be going anywhere on those. But for now, I don't see any reason why the uptrend should falter unless we get influences from elsewhere, such as which in US bonds. Now, as I highlighted a few times, we've got this level here up at 4.26 in the 2 years. We had a little mooch above it, not very far, and we've given that up again. And it's been a similar situation in other yields as well. Just when you think they're creeping up, they come down again. So this one might be breaking this short-term trend, but only if it gets below this 3.5455 area. Then it starts to break the series of high lows, and maybe we found a bit of a top in play. In the European yields, bit of a different situation. Pound yield still holding their gains after that data yesterday. Others have given a bit up following US yields, but then it's all come back again. So we've got this little bit of divergence between the yield play in US and Europe and so on and so forth. But it's not really doing an awful lot in the FX market. As you can see there, euro dollar still just waffling around, still holding above 109, not really looking too interested in taking on 110. Part of the reason for that is that vols continue to come down. So we spoke about earlier in the week, they're still coming down from levels we looked at previously. Euro dollar cable below 8% on the 1 month vols. Dollar yen looking to maybe move below 10%. So as you said, when these vols come lower, when you get quiet periods, you get this sort of action where you're sitting in 20, 30 pip ranges for a while. Then you get a headline, you get a big move, and then it all goes quiet again. So if you're trying to trade this environment, you've got to pick your edges, pick your levels. If we get a half-ass move to 110, that may be a good place for short if it's not a huge headline. If you don't see it breaking it, then maybe you can try a little scalp short, see if you can nick 10, 20 pips out of it. Same on the downside into these lows and 109. If there's no big headlines and we have a little meander down there, those are the sort of areas that may hold the price in while these vols are low. What are you guys making of it? It's I don't want to talk about it because I don't want vols to drop. We've been blessed with the vols over the last few months. We don't want to get into sort of summer trading, do we?
Unless you want to trade it, unless you want to trade options, I'm quite happy that the vols are coming back, because for a good while it was just impossible to buy yen options, for instance, and the rest was also very expensive, sterling and everything. I'm quite happy that it comes down, because I do think that yes, we have a lull in some instruments, and the moves have slowed down. But it doesn't mean that stuff is not going to move. I think, for instance, if the Bank of Japan, will it be a move or no move? The market will probably react to it, because the yen has been reactive to it. And but for the euro dollar, it's a different story. I think the euro dollar, I'm not even looking to trade it right now. People are quite successfully trading this call it quarter, 3/4 range for now in the euro dollar, but as we can see, most of it is going on in the crosses. But yeah, I'm not unhappy that the vols are coming down. Hello? Did we lose Ryan?
You were cutting out as well for a little bit. Okay, no, we're here.
No, I'm here. Yeah, I was going to say, the reason I don't like the vols coming down, look, there's always good vol and bad vol, or you can have too much vol, obviously. It's just I don't like it when you get into a position on something and then, say, a headline, and then you get a small move and then it just sits and does nothing. So I'm not excited that vols are coming down. If staying around 8-9%, I think it keeps decent enough vol in there. But as you say, we still get big moves around headlines or data and things like that. I don't think that's out of the question just yet.
The thing is, though, vols can hardly come off to levels where we knew them before, just because of the interest rates. Because the interest rates being higher, there's more volatility in the interest rates. The vol in the FX options will de facto mathematically stay higher, even if we would start to have like 20-30 points in a couple of days range only in the euro dollar, which is actually a good possibility, I think. Those vols can hardly come off because the swaps are more expensive than before. If you look at the yen, for instance, the hedging costs are very high. So those vols can hardly come off to levels where we saw them before. If you are in a zero interest rate environment everywhere, then the vols have more chance or more risk, or more chance, depending how you look at it, to come down to very, very low levels if everybody is on the same page. But now there's a good chance of imbalances or discrepancies between or changes between different central banks. So mathematically, since you are dealing with higher swap and forward rates, the vols, the implied vols will stay higher. So they won't come off to really stage where it's going to collapse. But actually, it's pretty interesting that dollar Canada is relatively low now.
Yeah, that's usually one of the fairly high ones.
Well,
But you got to take it as it comes, I suppose. But yeah, anyway, Michael said about Japanese CPI. Can it move the markets? Yeah, absolutely. It has the potential to be a big mover. I think it's a big mover, whatever the number is. Either it comes out as expected. Let's see, get it up on the screen for you. I should have it here. If it comes out as expected, that's going to keep inflation above the BOJ's target. So that suggests that inflation pressures are still remaining. If it comes in higher, obviously that's extra cherry on the cake. And if it comes in lower, much lower than expected, then that's going to play into the BOE's current message that they expect inflation to continue lower. Obviously, all this is coming ahead of the Bank of Japan meeting next week, so it's going to have extra spice. So I think it could be quite a mover. Probably giving it the kiss of death now, and dollar yen will move 5 pips like it did last time. But we're traders. We have to know where our risk is, where the next slap round the face is coming from. And for yen traders, this is going to be it. Do you expect a big reaction yourself, Kay or Stel, over this one?
Over the Japanese inflation? Not really. I mean, again, it has to be something quite different to the expectation, and I can't see that happening. 0.1, 0.2 either way, I don't think it's going to make any difference.
Yeah, Kay?
Yeah, as I said, I think last time I said exactly the same. If you see sub 3%, then probably the market will react to it. Or if you start to print higher than the prior months, then we may see some reactions as well. By the way, the PMIs come out in Japan as well, and I must say it's been a while that they really have moved the stuff. So for the next night, since they come out together, we may have a bit of difficulties finding out which one is moving which. But yeah, I would agree with Stelios. Unless we see a big variation, perhaps not that big a mover right now.
Yeah. Okay. So I say it might be. You say it might not be. We've covered all bases anyway. The worst of it. Kay, do you want to take a little look around?
Yeah. And I've got to start. And I saw DRG, or I hope I don't slaughter your name too much. I saw your question about Euro Kiwi. I'm going to have a look at it. But I have to start today with silver, and a tip of the hat to Stelios, who yesterday said, I'm going to buy these around 24.60, 65. I had a bidding at 24.48. And when Stelios said, I'm going to buy these, I actually said, okay, let's split my order and buy some here as well. So I bought them there as well. And Stelios nailed this one, really nailed it. You bought the low, I bought just a fraction above. I've already offloaded a little bit in this 25-30 area, and I folded the rest into my long-term position. I know this time you're trading it slightly differently, perhaps because I want to keep room in case we have like more dips to add. Again, bigger amounts. I did buy a little bit there and sold it out, but this is and I'm going to go not on the daily but on an hourly one. We bought it here 2 hours later.
Yeah,
it's already there.
I have to say this is luck, right? I mean, obviously you look at levels, you have ideas, but you have to get a little bit lucky as well. But
you traded your plan, and your plan was exactly what the market wanted to do. So this is a 2% move in 2 hours. You can't really get much better, right? You can't really get much better in any instrument. So I think this is really an absolutely great trade, Stel. Congrats on that one.
Thanks. I just want to say it's one of those things when it goes in your waist, it goes your way straight away, it releases the pressure, right? The way I'm trading this, remember, this was a third of my original position that I had sold at 25.62, 63, I can't remember. Now I bought 24.60 something, and I'm moving my stop up for this one, just in case. I still think there might be a pullback, but I've moved my stop now to 24.85 and see what happens. So yeah, just following that up.
Yeah, I still kept like half of what I bought there, and then folded that into the long-term one, because I'm firmly planning to buy those dips here as well, in case we get a. I want to keep some ammo in case we get really down to that red line again. But I really think it's that was an absolute great spotting there. So credit to who deserves the credit.
Yeah, well done, mate.
Thanks,
trading.
guys.
Yeah, absolutely. Gold did a little bit, although gold, as I said, there was I saw it go back into the 1970s for a bit. It did go down just a that bit more, but then as we went back above this blue line here, 1978, we raced back up to 2K, and we're trading around there. I must say, I mean, it could be the same as silver. Could be that we are trading back higher straight away. But I mean, gold is to me a bit of a strange one, and I wouldn't call it manipulated, but we still have those Chinese and Russians around, and if they ever stop buying, we could see a deeper setback, I think, down to 1930s, possibly. But yeah, for the time being, we have to respect this. This probably was just a stop run under these levels, since seeing the bounce. But we have to respect this. And then on the top side, if you get back above 2010, then there's likely a possibility we're going to revisit higher levels around 2030 or even the prior high. That for gold. We have to talk about oil because it broken back. So this is the OPEC gap. Then it shot up to prior highs we saw here, and a bit of a traffic zone around here, around this 83 zone. And then since then, there's a lot of talk about reduced demand. And since then, it just started to go lower again. And yesterday's oil data draws and stuff like that haven't changed much. We had a really fast blip higher, but didn't really last at all. So now we are, first of all, back below the opening gap. We're trading in the 77s. I think there's a bit of a trend line to respect here around 76, and that is not too far from where we had the close on that Friday and the gap open on the Monday. So a lot of people are talking about closing this gap, and we're joking about it's either never going to get there for people who are waiting to buy there, or it's going to get through, stop everybody out, and then start to rally again. And if you want to trade it, and if you want to catch a knife, I'd have a look at this other trend line here, because it is like a 1, 2, 3, and even here it was having an importance as well. And that's a bit below that level, 75.35. And if you can spare the extra few dimes, perhaps if you want to reload it down here, perhaps your stop should rather be under 74.60. That about oil. And then, since we mentioned oil, we have to mention a few currencies that can be driven by oil. And first one is Euro Canada. We've been trying and pushing yesterday and this morning, and it's having had a little bit of an issue to push through. But then, since the euro is still so much, is still so big, especially in the European mornings. If you look at euro crosses, they seem to find really bids on every hour or so. We did finally go through, but we are still below this 148, which is probably the alarm zone if this move is to continue. Now, keep an eye on this zone here. It's around 147.50, 60 for what's going to happen on the close. I don't know whether it's important around noon or even tonight, but since the Canadian CPI was lower and oil coming back down, this one's really put in a pretty decent move, and we are in an interesting zone there. And the other one, which really is powering on, and we can relay it to lower energy as well, and to lower European gas prices, is Euronoki. And I know Stel is looking at that as well, and I've been talking about this one. So first of all, we are hitting the top end of the channel, or how you want to call it, wedge, or is like slightly getting together. But that's the first one, and we're really trading on it. So that's the first really interesting level to watch here. But then, as Stel and I were already mentioning, this is where I reckon it's time for reflection, and I'm pretty happy that it happens at around this time of the month. We have another week to go this month, and ideally, what I would hope or like to see is this to just, and it's going really fast, and that's a bit of a worry, but to really get up there right at the end of the month, and then see next month what's going on, because this is I think timing wise, the Norges Bank will let us know what they want to do with the May FX, and we are going to be end of month, and if we get a push towards the end of month, there may be just enough overreaching for it to finally find a decent top. So I think it's the levels are important, but the timing is also going to be important. So Stel, yeah, you're looking at this one too, right?
I'm looking at this one too. I am just sitting on my hands as much as I can. I really want to short it, but it's getting there now. And yeah, exactly like you've drawn it. The Euro Norway and Dollar Norway as well. Both I want to sell. Haven't pulled the trigger yet. Dollar Norway is more like 1070. We're close, 1070, 72 or something like that. But
yeah, we are in a little intermediate zone here.
Yeah. You know what? I've been thinking about selling and or shorting, and I've been holding off, and it's been the right choice so far. That's why I'm being a little bit more cautious.
And as I was saying in the room as well, we could be looking at timing here too. So this is a little bit shorter. The Euro Noki wasn't daily. This is the 4 hours. But if you look at this zone here, if ever this breaks back, I think then the party may be over for a while. And so that's about 1.5% away from where we are. And if you go back onto the Euro Norway, it's further away. But I think I've put some tighter. No, I haven't put tighter ones on here. But the first level is not before 11:35, 36 actually. Because it's so powerful, this move. It's very tough to stand in the way of it. But if it goes up into the 1170s, I'm going to, and I've already mentioned that before, I'm going to really, I think it's going to be reflection time there.
Yeah.
What are the other ones that we look at? Yeah, so Ryan already showed this one. And that's a level that Gregor highlighted the other day, 135.10. We stopped exactly there, and today we are stopping again around the top end of this channel. So in the middle of there, in the middle of this, I think that the real downside danger zone right now is the first one is 133.80. That's also where we broke the trend line coming down, and then we can get back to 133.40, but I'm not sure, since the trend line is really pretty steep. that this is going to stop much. I really think 133.80 figure is the first zone. If that breaks to the downside, then we could see some acceleration. But the interesting one is the cloud, right? And as I was showing yesterday, so the last time that we closed above, yeah, we had a little one in on the 29th of March. So I lied. It's not a month ago. It's less than a month ago. But as you can see, we've been trying. But the last time we really closed above was here, but yesterday we did close above. So today, as I was saying, it's at 134.33. So that's your intermediate level here for the dollar yen today. That is for the yen. And then, of course, we need to look at a few more of those euro crosses, right? And one of them is this euro kiwi. Now, as we've seen in some other euro crosses, this is one pretty powerful move, and the Kiwi CPI overnight hasn't really put any doubt in the buyer's mind. So now we're through this 176.60. Where are we trading now? 177.5. So this is your first zone here. Perhaps you have to include 176.25 somewhere here. This is your first zone for to watch. If it holds, we can continue to push into the 178s, and why not have a print around 180. The prior high, and this is comparable to this Euro Noki, although they are driven by different elements, of course. The prior high is in the 182s. It's in Euro Kiwi terms, from here to 182, it's not a lot. It's 5 big figures. It's about 3%. It's a little less than 3%, but this is possible because we have done. No, I have to get closer here. Only this month, or from the end of March, and then earlier this month, we've already done more than that. So it is possible if this continues, and I find it very hard to counter trade this for the time being. Euro Aussie, a little less, how shall I say, obvious right now. Yes, we are finding demand around the short term 50% it was in the 162s. But then if you look at the wider picture, it does look like the Euro Kiwi, especially since we've broken above this 159. But we are starting to, I think, struggle a little bit more. I must say, we're struggling a little bit more here. I think I would love to see a retest of 164, 164 and a half. But there are these interesting zones here, right? And I'd like to see a retest and then see what happens. And that may be one where we also closer to the ECB, because we are slowly getting into the ECB territory as well. I would like to see it closer up there and then decide, perhaps a bit like the Euro Norway around month end. If we start to get back below 162.5, the short-term trend line will be broken, and then there is perhaps a possibility to get a deeper correction lower. It's a bit struggling to make more headway. Anything else, or do you want to look at anything else, Ryan, or so?
No, it's all.
Last I wanted to show is Euro Yen. We're still banging around those highs here. For as long and we retested it and then bounced. For as long as the prior 146 3/4 holds, I wouldn't really start to fight this. Because the euro is, as I said, especially in the European mornings, is relatively strong, and we had those setbacks in dollar yen, and yet euro yen can't really make it back up this prior high here. So this is your first port of call or level of interest. Yeah, sorry. Back to you.
That's all right, mate.
Or what do you want to look at if you want to?
No, I've not got much to look at. The only other one I am keeping half an eye on is Euro Sterling. I'm still looking to maybe knock out my 88 exposure. If we get another run up, you can share that or whatever. If you got it up there.
Yeah.
There we go. It pretty much held the 88, 87, 90 area yesterday, as it tends to do. Again, when there's not an awful lot going on, the old stretch points and the old levels come into play. But I think if we get a move up to 88, 60s again, I'm gonna clear out my 88s where I'm long, like the low 88s, and just see if we get a move either side, and maybe do a bit of a rinse and repeat down in towards those lows, the 87s, 50s, 60s, that zone I've got down there, and just maybe see if I can just job it a bit around. But yeah, apart from that, I'm finding at the moment a lot of my stuff I'm waiting for. I'm waiting for $1, I'm waiting for Euro Sterling, I'm waiting for dollar yen, I'm waiting for this, waiting for that. And when you get in that sort of frame of mind, if how you trade, you've got to be careful that you don't start trading for trading's sake and getting into stuff at levels that you really don't want to be in at. But if you can have a little job around, keep it small, keep it tight, and that way it doesn't cost you money if you do have a little mess around. But looking at that cable, it's just dragging along in the middle of the recent high lows, and we're sitting bang in the middle, give or take a few pips.
Yeah, the 124, 40, 50 looks still to magnet, whether it be on the way up or down. This still looks to be a magnet around there, because it's like an obliged revisit all the time. Yeah, for the rest, low 124s, 124 the figure, and then 124 3/4, and then 120 up around 125 figure 10. I tried to do the Euro Sterling yesterday and this morning, but I've just given up. It cost me 20-25 points to try in between ranges, and on the back of the better labor report and the higher CPI. It just doesn't want to go anywhere, this Euro Sterling right now.
Yeah, I might take a look at that cable. Well, maybe there's some option interest floating around that 124.5 area.
Yeah, it might be because it we can see, right?
Yeah.
Perhaps on the hourlies, it's even more clear. It's like a magnet. It always comes back to there. It's really it's really magneting this level. But let me, and then I just finish by this. So more medium term, to me, that is still going to be the make or break level for cable, 122.63. That's the in the medium term, to me, the big zone still. And then on the top side, if ever we clear the prior 125.5, then it's likely we are going to have a visit of this more longer term trend line, I reckon, with some intermediate stations that lies around. By the time we may get there, perhaps 127 figure a quarter, something like that. That is really the biggest zone of interest, in my opinion.
Look how far that 124.50 goes. You've got it marked there, going back to December and Feb. Solid double top.
Yeah, absolutely.
Yeah. So
absolutely.
yeah, old levels play hardball again.
Yeah, very hard, very hard.
Yeah.
Alrighty.
Yep. Well, thank you very much, everybody. Thanks as always to the wonderful Stelios and the wonderful K-Man for the insight.
Wonderful. Nobody's called me wonderful before. Thank you.
Well, there you go. You can have a badge with wonderful on it. And obviously, thanks to all the viewers for coming and watching us here at the Flow Show. Keep an eye on that data. We do have some jobless claims data later today, and that Philly Fed, and the good old funny Eurozone consumer confidence, which has never been, it's been positive, I think 4 times its entire history, and also the Japanese CPI. So if you're in yen, keep an eye on that one, and we shall see what's happened tomorrow on tomorrow's show. So thank you, everyone. See you tomorrow.
Bye-bye, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.